Hello everyone, and in this video we're gonna go over a debit call spread tutorial from Market Chameleon. We are going to use the filters. We're gonna see if there's any trade opportunities on high market cap, see all this Apple before we even do any filters. As of now, there's over 1,700 results, and this is why I like to use the filters. But before we even do anything, let's go over a disclaimer, and then we're gonna try and understand what is a debit call spread and how to use the screener. So let's get started with this. First of all, and know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. And my name is Ziv, also known as Finance After 40. So if you already follow my channel, you know in the last couple of days we did put credit spread screener, did a couple of tutorials, and you can go and watch that and learn about put credit spread. Now we are going to learn about debit call spread. So first of all, you see here, this is very nice, very simple. It tells you what it is in a nutshell before it goes into details right here, which we're gonna read. It says the outlook. Bullish market. You have a bullish market and debit call spread screener. So what does it mean? Let's read real quick. Debit long call spread involves you buy a call option for expiration of a particular underlying asset at one particular strike price, and you sell the same number of call options for the same expiration at a higher strike price. I'm going to give you a simple example in a second. Because you are selling options at a lower premium than you are buying, this strategy requires a net outlay of premium at the time of the trade, meaning this is a debit trade. This is not a credit trade, this is a debit trade, and I'm going to give you an example. And here it tells you use all the filters below, and you feel free to read all about that, but use all the filters to find out stuff better, like trade opportunities. So what is a debit call spread? As you see here, again, bullish market. That means, let's say the stock, and I'm going to give it to you real simple. The stock is at $100. I'm not going to say Tesla, Apple, it doesn't matter. Let's say the stock is at 100. You are bullish that the stock is going to go up. You are buying, for example, the $105 calls for, let's say, the monthly expiration next month, and simultaneously you are also selling $100 calls, for example. So you're paying for the debit 105, for the 105 calls you're paying a high amount of debit, but you're reducing that debit by selling the farther out of the money calls. Your max profit is if the stock at 100, for this example, goes all the way to 110 and break 110. Doesn't matter if it goes to 120, 150. If it goes to 110.1 penny, you made the max amount of profit. So, in order to find some trade ideas, and feel free to comment below if you need more explanation, which I can do, no problem. Now you can go over all of this. This is like the default settings that you can play around with, but what I like to do, I like to go over all the presets. You see here, Market Chameleon presets. So and by the way, 7 days trial, link in the description if you're not a member just yet. So we got here a couple of options. I think it's a little less than what we saw on the put credit spread, but nonetheless, we got the preset. So this is the default. You see here the expiration, the spread. That's the default. But let's continue and see what we got. So for example, let's do the first two. Bullish crossover plus theoretical edge. Then we got best by theoretical edge and 70% win rate. Recently viewed. Best return if flat. Best by win rate. Best downside cushion. Seasonality. Let's go over by this. With the first one at least. Bullish crossover plus theoretical edge. Bullish crossover is a technical indicator So the stock is on an up momentum, which is what you want to see on a debit spread, because you are buying out of the money debit call spread, and you assume that the stock will go higher all the way to the call that you sold. Plus theoretical edge, that means that you are paying less for this debit spread based on history. So based on history, let's say we take the same example, the 105, 110, and you should pay, I don't know, $200 for example, based on history and averages. By theoretical edge, you will pay just 100. So let's click and see what we got. So you got the filters, expiration, the next 30 days, this call spread, max $5 spread between the strike. This is fine, this is fine. It gives you all the option up to $500 max payment. Dividend, it says after expiration. Earning doesn't mean anything, which means earning any means that earning can be tomorrow, and you're bullish on a stock, so maybe the stock will go up post earnings. Theoretical edge at least 5%, so you will pay less on that debit spread based on history. Win rate, theoretical win rate over 60%, show best by theoretical edge. So it only found 3 options. Interesting. Now I myself like to look at a high market cap stock. Remember, this was 1,700 pages. We only have 3. This is crazy. So LUV, I think it's the Southwest Airlines. Let's see. Yeah, Southwest Airlines price $30. I'm not saying take those trade ideas. I'm just saying what we got, what the filter found for us. So Southwest Airlines price $30, market cap 17 billion. And the trade itself, look at this, the debit that you're paying is $110, but based on history you should have paid $150. And this is your edge, 36% with a 64.9% win rate. Interesting. The trade itself, you buy the call, the 29.5 call, and you sell the 32 calls. So your max profit is if Southwest Airlines go above 32, expiration September 20. And it basically says, and your max gain that you can make is $140 based on $110 that you invested. If the stock is flat, you are losing 40%. Okay, so that's not ideal. Match, let's see what they have just for the example. This is the one that made the Tinder app. Price 36.7. The debit is $200 compared to $236, 60% win rate. And it tells you to buy the 35, which is already in the money, and sell the 39. So you are making money, but not too much. You need by September 27, there's an event in here that the match group will go above 39 for max profit of $200. So max profit is 200, but you're risking 200 compared to 236. I don't like 60% odd. We're gonna change another filter in a minute. I don't know what this one is, but so that's just one filter to go. Bullish crossover plus theoretical edge. So let's do the next one. Best by theoretical edge and 70% rate. That's good. So that means you also you pay less than what you should have paid, but also there's a 70% win rate. I like this filter. So let's click and see what we got. And now we have, okay, in a minute, still loading. There we go. Now we have 10 pages. Interesting. 10 pages. And we're gonna see the filters. Next 30 days, $5 spread, any positive if the stock is flat, so that's good. Dividend after expiration, and those 3 are important. Theoretical edge, any positive. Theoretical win rate over 70%, and show best by theoretical edge. Okay. So let's see, we got Apple, Microsoft, Nvidia, Google, Amazon, Meta, all the good stuff, as they say, all the good stuff. So I'm gonna filter this time. I'm gonna filter by win rate, just to see what we see. And again, if you filter by theoretical edge, that means that you pay less for that debit compared to history. So if you click twice on win rate, just to see what we see. It found you. You see here 98%, 97, 95. I'm looking for something that I know. So we got Qualcomm, okay, 183 billion market cap, stock price 163. But you see here no edge, 0.6% edge. But it tells you that the debit is 495 compared to 498, and it tells you that you're already in the money basically for next week, for September 13. You buy the 144 call, you sell the 149. You're already super deep in the money, but your max gain $5. Okay, so it's not really worth my time. Let's find something. Let's find something that we know. You know what? SMCI, they had some stuff with shorts. Let's keep going. All those are good, over 80%. Kruger, I think they have earnings. Let's see, next earnings next week. Interesting. Okay. So let's just see Kruger for the example. Price 53. And this is your, because you see here 12% edge. So the debit is $266 compared to $299. That's good. 87% win rate. And it tells you basically to buy the 48.5, sell the 52 calls. And as long as the stock stays above 52, post earnings and everything, you are golden. And this is your max, basically max gain, $84. And if the stock doesn't go anywhere, you make 31% on your yield. Now, if we change this by theoretical edge, let's see what we got. Okay, and you can play with the market cap just for the market leaders and all that. But if we change this, you see here Avago, I think they have earnings today. Price today 153.9. And it tells you the debit call spread, you see 41% edge, 73% win rate. So you pay for the debit 135 compared to 191. Interesting. So that's like $60 savings. And it tells you basically buy the 152.5, sell the 155. And this is a bullish play. Again, this is a bullish outlook. Remember this, bullish market. This is your outlook. You assume that Avago will go up after earnings, which is today, and the expiration for this is 8 days from now on the 13th. 8 or 9 days, something like that. Next Friday, basically. But you assume that the price will be above 155. Let's see, Dell, price 108. It's another big theoretical edge. 32% edge, so you pay $275 compared to $364. That's a $90 discount, which is like 30%, 32% edge. This is your edge, and the trade itself is 105, 110. So your goal is for Dell to go a little over from 108 to 110 for a max profit. Now, if the stock doesn't go anywhere, return if stock is flat, you still make 12%. Your max gain is 225, but you're not getting that unless Dell goes up. But if Dell stays at 108, you still make 12% on your money, which is another thing to consider. Let's see something else. What we got? I'm looking for something like super. There's all those stuff. Dollar Tree, they just posted earning yesterday. Interesting. Price 67. Okay, it's up to you. Starbucks 92, and you can buy the 90-93 call debit spread that you see here. You pay 184 compared to 227. So basically, tons of opportunities and trade ideas if you are bullish. Basically, if the market is green, if the market is bullish, if the stock market is bullish, if the stock that you wanna sell, buy debit call spread. I remember a lot of people did a debit spread on Tesla in 2021 craze, but feel free to also filter by all of this and find some trade opportunities and comment below which trade ideas you have found. If you're not a member just yet, 7 days trial for Market Chameleon, link in the description, and I will see you next time. Thank you.